Hello, welcome to the European Open briefing for Thursday, January 11th. I'm Rafi Barjan, currency analyst at xm.com, and we're going to be taking a look at the latest developments in the currency markets today. So we are seeing a bit of a rebound in the US dollar this morning. We saw a sharp sell-off yesterday on reports that China may be reducing its purchases of US government bonds. So that put downside pressure on both the dollar and in bond markets. We saw treasury yields jumping higher. But we are seeing a bit of a reversal in those moves this morning after China dismissed those reports. The Japanese yen, it did surge on Tuesday on speculation that the Bank of Japan may soon be announcing that it's exiting its stimulus program. But this morning, when the Bank of Japan maintained the size of its bond purchases in its regular market operation conducted earlier today, that did ease those concerns. So we did see a bit of a pullback in the yen. Other notable movers this morning include the Australian dollar, which jumped higher after Australian retail sales rose much stronger than expected, and the Canadian dollar has come back under pressure again on concerns that the US may be about to pull out of the North American free trade agreement. So let's begin with the dollar. We can see the dollar index in purple here. That big drop yesterday on those reports that China is considering halting or slowing its purchases of US Treasury notes. That report was dismissed by China's foreign exchange regulator. He said that it must have been attributed to a wrong source. We saw the dollar index recovering pretty much all of its losses, climbing back above the 92.50 level this morning. Although that big drop in the dollar did boost gold prices yesterday, they briefly surged to a 4-month high of $1,326.56 an ounce before easing to around 1,317. So the focus now is back on US data. We've got producer prices released later in the US session, and tomorrow we're going to have the all-important CPI and retail sales figures as well. If we look at what's happening to dollar-yen pair, we can see here that big drop earlier in the week that came after the Bank of Japan unexpectedly reduced its purchases of long-dated Japanese government bonds in one of its regular market operations. It conducted another operation today where they maintained the size on their bond purchases, so that it is concerns that the Bank of Japan is not about to announce a withdrawal from its massive stimulus program, though the dollar yen still fell to a 6-week low of 111.26 yesterday before recovering to around the 111.80 region this morning. If we look at what happened to the bond yields, the 10-year yield on US Treasury notes hit a 10-month high of 2.597% yesterday. It has dropped back this morning to around 2.54. And that's a bit of a odd relationship we can see here in the chart between bond yields and dollar yen. Usually they are positively correlated, so the markets seem to be behaving strangely of late, but those moves in the dollar did impact other pairs as well. We can see euro dollar jumping back above the 1.20 level yesterday. It has dropped back to around 1.1934 at the moment. The focus for the euro dollar today will be the ECB minutes. Those are due at 12:30 GMT. The pound also got a boost from the dollar weakness. It rose us to around 1.3560. It didn't receive that much of a boost from stronger than expected industrial manufacturing output figures out yesterday, where we saw manufacturing output in the UK hitting its highest in 10 years. We can see the pound has been steadily sliding this week. It hit a 2-week low 1.3472 a short while ago. So there are some Brexit concerns once again lurking in the background. Yesterday, there's news that financial jobs in London plunged by 37% in December, and also the Prime Minister Theresa May's cabinet reshuffle didn't go quite as planned. On the one hand, it did provide a bit of certainty in terms of the senior ministers keeping their roles. On the other hand, she didn't manage to reassert her authority in the party as well as it was hoped. So the momentum for the pound at the moment is to the downside. In contrast, though, we're seeing the Aussie and the New Zealand dollars being strongly bullish in the short term. The Aussie hit a 3-month high of 0.7886 on the back of stronger than expected retail sales out of Australia. Retail sales jumped by 1.2% month on month in November versus forecasts of just 0.4%. So that has brought forward expectations of when the RBA will raise rates. That could come as early as December 2018, if not sooner. The Kiwi is also not doing too badly, though it is off yesterday's peak of 0.7028. That was a 3-month high. Let's have a look at the Canadian dollar and the Mexican peso now, because it was reported that according to two Canadian government sources, they are convinced that President Trump will soon announce the withdrawal of the US from NAFTA. This is being denied by the White House, though it is creating downside pressure on both the Canadian dollar and the Mexican peso, as both countries rely heavily on trade with the United States. We saw the Nuni drop to a 1.5-week low of 1.2583 to the US dollar. The Mexican peso hit 19.41 before strengthening to around 19.28. And finally, looking at today's economic calendar, we did just have German GDP data for the full year 2017. They actually came short of expectation at 2.2% versus forecasts of 2.4%, which is strange given the fact that recent data out of Germany has been on the strong side. Later, we're going to have the Eurozone industrial production numbers, and in the US, we have the weekly jobless claims and the producer prices as well ahead of tomorrow's inflation numbers for December. And we're also going to have New York Fed President William Dudley speaking on the economic outlook at 20:30 GMT. That's it from me. Thank you very much for watching and have a great day.